This is all about Bitcoin, a show dedicated to all things question of markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a look at Bitcoin right now. The CoinDesk Bitcoin price XVX index is on a tear, rising over $40,000 now, $40,800 right now. It is making an advance of about 11.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Now, CoinDesk sister company Genesis Trading reminding folks that the jump in BTC is nice, but volumes are much lower than usual due to the Chinese New Year holidays and the Asian market seeing lower volumes as seen in this chart. The reduced spot trading volume has been a trend in crypto for most of January, according to Crypto Compare, the data provider, adding that January's spot trading volume for the crypto market across major exchanges reached their lowest level since December 2020. Nevertheless, Bitcoin topping $40,000 for the first time in 2 weeks after dipping following an unexpectedly strong January jobs report and big upward revisions to the figures previously reported for 2021. Theoretically, such a report would be negative for Bitcoin because the Federal Reserve might need to move more aggressively in hiking interest rates to keep the labor market from overheating. In general, Bitcoin's price has responded negatively to tighter monetary policy. But Friday's overall price bounce has Bitcoin advocates flippantly calling an end to the bear market. Traditional markets are also seeing a boost. Crypto Finance AG pegging the next resistance level on the upside at about $43,000 and market support at $33,000 or $28,000 in the worst case. Joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel, CoinDesk Managing Editor of Technology, Christie Harkin in Toronto, and Managing Editor of Markets, Brad Keoun in Austin. Happy Friday to you, Christie and Brad.
Hi there.
You too, Christine.
All right, taking a look at these markets, we're seeing a bounce, Brad. Jobs market have much of an impact, and we have to balance this with low volumes, so not to get too hasty on judgments.
For sure, Christine. I mean, waking up this morning, I don't think anybody really expected a big rally like this today. It's kind of a surprise. Some analysts are telling us that it appears in hindsight that this market was looking for a reason to rally. There's no logic behind kind of the move. If in the context of the jobs report, as you mentioned, it would seem that jobs report would tilt the Fed a little more hawkish, if anything. But we had gone down a lot and the market had stabilized. And, the way this market works is things kind of, build up and then they move. All of a sudden we're trading sideways for a while, which is where we've been for the past couple of weeks. And all of a sudden we're having to move back up here again today, above $40,000. And so it's all of a sudden kind of changes the outlook a little bit.
Mm-hmm. And we're also seeing some coins leaving exchanging. That is a bullish sign. What's the new resistance support level your technical team is seeing?
Again, we have a big move like this and all of a sudden the outlook changes pretty quickly. Before this, people were seeing $40,000 as the level of resistance that we would have to break through. Now we've kind of just jammed right through it. And now people are talking about 45,000, even 51,000. So, everybody knows Bitcoin is a very volatile asset. Just like we saw a big, swift sell-off on the downside, we often see these swift sell-ups on the upside.
Mm-hmm. All right, well, let's take a look at some of the market-moving headlines of the week. And taxes was a key theme, I would say. The IRS is allowing a tax refund for staked Tezos, so not clear that this is precedent-setting. Also, U.S. lawmakers are reintroducing a bill to provide tax relief for small crypto transactions. The legislation by a bipartisan group of House representatives would exempt realized crypto gains under $200. What do we know about this, Christie?
Well, this is kind of an interesting move. So what we're looking at is the Virtual Cryptocurrency Tax Fairness Act, an amendment to the Internal Revenue Service, IRS, in the state's tax code. And it was brought by Reps Suzanne Del Bene in Washington, and another in Arizona, Florida, Minnesota, as you say, bipartisan. And that would simplify tax burdens on daily crypto users who now, at the moment, have to report even the smallest capital gain. So right now, say you go and you try to pay for a cup of coffee with Bitcoin. And yes, you can do that using a variety of methods I'm not going to get into right now. But if you do, or if you buy some BTC swag on a website and pay with Bitcoin, each of those little purchases creates a taxable event. And you have to keep a record of how much you originally bought that little bit of Bitcoin for originally, and then report any change, either up or down, in that Bitcoin's value at the point that you spent it, which of course is a total pain. So this legislation would mean that next year on your taxes, if you live in the US, you wouldn't have to worry about any of those little rinky-dink transactions that you made this year under $200 in value, since it will apply retroactively to the beginning of 2022. And here's the thing. Jerry Brito, the executive director of Coin Center, has pointed out a major reason why this is a good thing for Bitcoin development. As he says, not only will this create a level playing field for digital currencies, but it will also help unleash innovation on applications like micropayments, so little bits of Bitcoin that you can tip people, which can consist of dozens of transactions per minute and thus are difficult to square with the current law. So if this passes, it'll make these microtransactions and just small payments a lot less of a headache to finagle at the end of the year when you go to report your taxes.
Mm-hmm. Yeah, there's a lot of interesting legislation coming out with respect to crypto, with respect to Bitcoin, really. In Arizona, the state senator Wendy Rogers there was introducing a bill that would make Bitcoin legal tender in the state. And she introduced a couple bills this week as well that would exempt Bitcoin from property tax, allow state agencies to accept Bitcoin as a form of payment for taxes, fees, fines, etc. So a lot of interesting crypto-friendly bills being introduced. Don't know if they'll be passed. It's a whole other can of worms. Also, MicroStrategy posting a total Bitcoin impairment loss of $831 million for 2021 versus $71 million in 2020. That's according to their latest earnings statement. The impairment reflects the decline in the price of Bitcoin versus the price at which the Bitcoin was acquired. Nevertheless, MicroStrategy is still very firm in its Bitcoin accumulation strategy, buying an extra 660 Bitcoins for around 25 million throughout January. Brad, everyone is a maxi, from Fidelity to David Marcus, the former head of Facebook and Meta, now discontinued Libra DM project. But there's also some great criticisms from JPMORGAN. What can you tell me about that?
Well, I just thought it was interesting, Bitcoin, again, it has gotten challenged by all of the other cryptocurrencies with Ethereum and all the other layer 1, layer 2 tokens that had just, meteoric exponential token price gains last year. And Bitcoin, it was okay last year, but it wasn't, didn't multiply in price. But here you have some really, thought leader type of institutions or people coming out and really making a case for Bitcoin. So you have David Marcus. His comment was, quote, "It's become clear to me that Bitcoin will be the one asset and layer 1 blockchain still around in 20 plus years." He was the leader of Facebook's Libra, subsequently named DM stablecoin project, which is now kind of winding down, and they're selling that to Silvergate Bank. But he's a big fan of Bitcoin. And Fidelity's comment was, "Bitcoin is the most secure, decentralized, sound digital money, and any improvement will necessarily face trade-offs." Again, they're really, really talking up Bitcoin. So, despite the sell-off and, challengers, it kind of biting at their heels, there's a lot of people who really believe that Bitcoin is kind of destined to
I was
stay
surprised by David
blockchain.
Marcus's comments that he's coming out as this, Bitcoin advocate. But you also mentioned criticism from JPMorgan.
Right. JPMorgan. And, sometimes, I mean, honestly, Wall Street, they seem like they know everything, but they really don't. They're not the specialists in crypto. They are catching up in crypto. But there was a report today by CoinDesk's Ian Allison. He makes a really good point. At this point, central banks and treasuries have created a massive confidence void. It would be strange if some other alternative to fiat money didn't appear on the scene. I mean, that's kind of like big picture. Every crypto person kind of believes that. But he's just making some points that Bitcoin's not quite as decentralized as they would like to make it out to be, that there's a lot of concentration. He says 2% of Bitcoin holders own 72% of the value. I mean, I haven't checked those numbers, but that is quite a bit of concentration. Mm-hmm. It's just like reminds us that a lot of the focus on Bitcoin market is focused on these whales, when they start moving, and it really moves the market. So
I wonder if he's including Satoshi's coins in that, though, which are unlikely to move.
Possible Satoshi
depends on
coins,
if they're talking about active addresses. I don't know.
Mm-hmm. Yeah, who knows? Well, looking ahead to next week, we've been keeping our eyes on Russia. Developments going there. The finance ministry wants to let banks sell crypto, but the Bank of Russia wants to ban it. Putin is kind of in between, praising crypto mining advantages in the country. So interesting to see how crypto policy evolves and takes shape in Russia. Also, India just came out with a 30% tax on crypto. They had previously discussed banning it. And interesting to see where India takes policy. They really want to launch their digital rupee alongside, as we see China right now with the Beijing Olympics launching their CBDC digital yuan. So the world is watching how that is being used. And we do have Senator Pat Toomey saying, the U.S. has to get on board. We've got Jeremy Lair, the CEO of Circle, an issuer of USDC, saying the U.S. really has to step up to bat and become a leader in digital finance. Other news we're watching, the storm in Texas that's shutting down some crypto miners because as this winter storm approaches, the Riot blockchain is among the companies on Stormwatch and looking to help protect the state's power grid. Christie, how is this impacting mining?
Right. So the takeaway from this is, Texas, if your power goes out, don't point the finger at Bitcoin miners because they are apparently trying to do their part. So if you're in Texas right now, you might be preparing for some cold days and nights, Brad. If ERCOT, the Electric Reliability Council of Texas grid, goes down again as it did last winter, the outage last year left about 4.5 million homes and businesses without power and led to nearly $200 billion in property damage. And it doesn't seem as if ERCOT has really learned a whole lot from it. They're expecting kind of more of the same. But the thing is to understand, Bitcoin miners are not using up that energy and making this happen. So over the past week, miners like Riot Blockchain, Compute North, Rhodium, they've already started either voluntarily, preemptively cutting down their energy consumption, or they're preparing to shut things down at a moment's notice. This is one of the unique characteristics of the Bitcoin mining industry. It has the ability to just shut things down in like 10 minutes should the need arise. And that's some incredibly nimble infrastructure right there. To be sure, Texas has programs that are available for heavy power consumers like crypto miners that gives them incentives to lower their energy usage during peak demand periods. And like, for example, some of the miners can sell some of their excess energy back to the grid. They are there to stabilize it. Riot participates in load management programs and other services. So they do get something out of it, but at the same time, they are mindful of the energy situation in Texas, and they are looking at making sure they are part of the solution and not the problem. And what does that relate to for hash rate and securing the Bitcoin infrastructure? There's quite a bit of hash rate in Texas, but it's not causing a blip. So hash rate reported from known pools is still over 200 exahashes per second, which is just like a tiny shade under the all-time high for reported pools. Even as these went offline, the difficulty adjusted upward last night by, okay, granted less than 1%, but still upward, not downward. And next week, so what we'll be looking at next week is as more go offline, we'll keep an eye on the hash rate and just see what happens in Texas. So, Brad, stay warm.
Yeah.
I was just going to say the word on the ground is, we had a couple freezes the past couple nights and it's already starting to warm up. I mean, this storm is nothing like the storm we had last year. So I think there's definitely a bit of a PR coup for our governor, Greg Abbott, who's been under serious scrutiny for how we're going to perform this year, but it's a much, much lower bar. Anyway, just to throw that in there.
Taking a look at next week, what do you see for the markets in terms of the Fed having any impact? There's also the short squeeze that could be the reason behind we're seeing a bounce in today's market. Do you see that having an impact going forward?
I mean, today's move is super interesting because, a lot of this anticipation of this year's Federal Reserve monetary policy tightening, which is the first time we've seen this for a couple of years. It's kind of already priced into the market, and the idea is that would be bad for Bitcoin and risk assets. And here we had another report this morning that would suggest that the Fed would get more hawkish. And yet we have this, we're up 11% over the past 24 hours. So that is kind of interesting. I mean, there's not a whole lot more kind of hawkishness that people are currently thinking that the Fed might price into the market. The markets react
Could it be
instantly
that 2% that owns 70% of the value of Bitcoin?
You could be right. We need to check that out, Christine. But I think things are looking more bullish right now than they were this morning, and certainly this time last week.
All right. That's a wrap. Thank you so much to our CoinDesk Weekend Review panel, Managing Editor of Technology, Christie Harkin, and Managing Editor of Markets, Brad Keoun in Austin. You guys have a fantastic weekend. All right.
You too, Christine.
That's it for All That Bitcoin. I'm your host, Christine Lee, and we'll do it all over again on Monday at 3 o'clock Eastern. Also join me Monday morning at 9 a.m. in New York for First Mover. You're watching CoinDesk TV.